Hello traders, hello everyone, my name is Greg Horot and welcome to our new intraday video analysis. Um, as you know, markets are positioned in risk on mode. We are seeing stocks, especially US markets, trading still at all-time highs, and looks like that this move is now supported after recent G20 meetings. So of course we are in a very strong uptrend when looking at S&P 500 daily chart. As you know, we've been tracking this fourth wave pullback and looks like that we are now already breaking into wave 5. Well, this could also be wave 5 of even more extended wave 3. So for now, yes, we are bullish, but as we will approach end of the year, I think that this market will move closer to a resistance. For now, this fifth wave is still incomplete. Looking at the 4-hour time frame here, you can see ongoing uptrend here. We have a very nice higher highs and higher swing lows with an extended lag in the middle here. So this fits to be a wave 3, meaning more upside after pullbacks. So when we are looking in this direction, very strong risk on mode, then of course our attention or special focus should be on yen crosses, or maybe even some commodity currencies, even versus the US dollar, because US dollar and Japanese yen will try to be the weakest in this game. So I am looking at New Zealand dollar, and I've been tracking this one for a while. And looks like that on a daily time frame we completed this very deep and complex correction. It was a very choppy one. Okay, so I'm labeling this as a WXY. So it's a counter trend movement, suggests that we should see this drop fully retraced, meaning bear has room for 74.60. That's one interpretation. The other is a little bit more aggressive and bearish. It shows that this reversal, the choppy one, reversal from the highs, can actually be a leading diagonal, and now you have a free wave rally. Well, even if that's a bearish interpretation, for the near term, I still think it's a bullish interpretation because wave C is incomplete. So wave C, it's a motive wave. It should be structured by 5 subwaves. So I will be looking for more upside here because we are now, looks like we are consolidating here. So let's take a look at the 4-hour chart here, and that's the pattern I'm tracking. Notice the very nice waves 1, 2, very strong break above base channel usually confirms that you are in a wave 3. So the current slow price action fits perfectly to be wave 4. Now wave 4 sometimes can be very deep or simple zigzag pattern, or maybe double zigzag, or in some cases even sideways for a flat or a triangle formation. For now this looks like it could be a sideways formation for a triangle here, an ABCDE pattern. So I will watch carefully these developments in the next few sessions, because I think that there can be opportunities on the long side as long we are trading above 69.80. So the first support, if that's going to be a triangle, would be around 71.50. A deeper one would be at 70.90. 70.90 is also the 38.2% retracement level of this extended wave 3. So that's definitely the region where we should be looking for potential bounce. Now also to make sure that we are on the right track here with risk on mode, just to give you a quick comparison here between the S&P 500 in blue and New Zealand dollar here in gray, and you can clearly see that these here are very nicely positively correlated. So if stocks will continue to outperform, then I think that sooner or later New Zealand dollar will try to catch the upside as well. Now on the other note, if you are looking for, maybe you are seeing US dollar moving into some very important reversal levels, and you expect actually the dollar will rally, then I think that commodity currencies are not the best choice to look for. Then you should look at very weak currencies, which are at the moment euro and pound for the last few sessions. So euro maybe is the best choice against the US dollar, or maybe even against commodity currencies, because after all, you have this on the 4-hour chart, you had only 3 wave rally from that low. Okay, so that's a counter trend movement, confirmed by a broken trend line here. So I think that even if we can rally some in the next few sessions, the upside can be limited around this broken trend line. So 1.16, 1.1630, that's the area where maybe this market could turn bearish. So if you are looking for if this whole sentiment, if stocks come aggressively to the downside suddenly, and you see dollar moving to the upside, then euro dollar is the best idea to look for potential weakness. But as long as stocks are in uptrend, I think that commodity currencies could outperform, and New Zealand dollar is going to be on my radar list. Okay, tourists, thank you very much for attention and hope to see you in our members area. Bye.